Welcome back to Wall Street Confidential. We're discussing oil. We'll be doing a couple of videos on oil right now. Now, I want to discuss equity futures and the role that those predictions have on the price of oil. We talked about it a little bit yesterday. What's happening today?
Well, I mean, this is, again, a very persistent pattern. The S&P has grown from 7% oil to 15% oil over the course of the last 5 years. So what you have to realize is that the oil companies are now a very big part, going to be soon with financial shrinking and tech shrinking, I think, the largest part of the S&P. So when the S&P futures go down because people want to make a bet against the market, they're really making a very powerful bet against oil and gas now. So what happens is that you may have the oil futures up, the natural gas futures up, but because of the power of the S&P index short sellers and people knocking the index down, you end up with stocks that perhaps would be higher if there were no S&P. So in other words, let's look at a Devon or a Chevron or a Chesapeake, okay, or a Range Resources. Remember, this is the S&P. If there was no basket, no S&P index basket, and believe me, until 1983 there wasn't one, then what would happen is that those companies would strictly trade off the oil futures and they would be much higher. But an S&P sale by major hedge funds or major mutual funds trying to hedge is always going to have the power to knock down even the good stocks. In this case, you've got this anomaly where the futures should really be controlling, particularly natural gas, should really be controlling outfits like Devon and Anadarko and Chesapeake. And natural gas futures going up. I remember you divide oil by 6 and you should get the natural level where natural gas should be. And I end up thinking, you know what? That's where the opportunity comes in. Now, let's be really clear. If the S&P futures keep going down or if the oil futures turn, then you're going to end up holding the bag. I am just saying that as a consistent pattern for a quick trade, that method has worked.
All right, so the best time to buy?
When you have the S&P futures down hard and you have the oil futures up hard, as you did this very morning, then you get that confluence where for a trade. Now, for an investment, I think oil's going to 150, so I don't care about any of this. But I know that a lot of people read Real Money and a lot of people watch Wall Street Confidential want the trade. That's been the pattern for the trade. It happened last Thursday. It happened this morning.
And it probably will happen again.
Yes.
So stay tuned. This is Wall Street Confidential. Thanks to Jim Cramer.